Alright, so in this video I'm going to be going over what to kind of look for when going short on a pullback strategy. So there's many ways to trade a pullback strategy, but the very first thing you want to do is always look at or take more or less of a top-down analysis approach. So you're going to start off on the highest time frame and work your way down. But not to kind of overcomplicate things, let's just say this is this trend here, this bearish trend is the 4-hour time frame, right? Meaning each candlestick closes every 4 hours, right? So we've identified this is our previous lower high point and this is a lower low point, right? We're going to be pulling out our Fibonacci tool from point A, with being the highest point of our previous lower high, to our point B, right? The lowest point that price reached before it started to actually pull back, right? So once you've completed the course, you can kind of come back to this video if you're looking for a more simple answer. But what we're going to be looking for pretty much is for price to pull back to a PRZ level, right? In this scenario here, price has pulled back to about a 50% PRZ level, right? I know I don't have an actual Fibonacci tool placed. I'm just kind of making things up, right? So price pull back into a 50% PRZ level where we do see previous market structure. Again, if you look left, structure always leaves clues, right? So the likelihood of price rejecting this level here is very high, especially if you look left and you see price has rejected this level multiple times, either up or down, right? Basic support and resistance, which you'll get into that later on in the course as well, right? So the likelihood of price rejecting this level is fairly strong. Now, again, so we've identified that price could potentially be at a lower high point. A point A and point B on Fibs has been pulled, so now you have two confirmations. Price is at a 50% PRZ level. Confirmation number 3 is that price has pulled back to a previous level of structure, right? And now all we're simply going to be looking for is, let's say there's a bullish candlestick here, right? And let's say this specific bullish candlestick has a really big wick towards the top, right? Now what we're going to be looking for is either a bearish engulfing, right? I'm just going to draw a bearish engulfing there, where price closes under the previous low of that wick, right? So if we break this down to a lower time frame, price was doing something like this, right? Actually, I'm going to draw here. Price was probably doing something like this. It hit this level, right? Probably went above it a little bit, which would be this wick here. Then the next 4-hour candle opens, it came down, and the 4-hour closed down here, right? So this would be the current candlestick, right? Again, going back to our bullish market structure videos, a break of trend is when price breaks a previous higher low point, right? So price has broken a higher low point on our lower time frame, indicating that we may be possibly going bearish, right? We may start a bearish trend. You're going to wait for price to pull back, and then you're going to look for another bearish engulfing, and you're going to hit that sell. Or you can sell at this point here. It depends, you know, how kind of in detail you want to get to it. So you could pretty much just take a short off of the bearish engulfing candlestick on the 4-hour, or off of the bearish engulfing candlestick on the hour time frame, right? Because this is our lower time frame, and we'll get into time frame correlation later on in the video. But that's pretty much what you're going to be looking for when it comes to short. Now you're going to get into candlesticks later on in the course, but the candlesticks that we're going to be looking for, the formations we're going to be looking for a reversal, right? It's just kind of, I'm going to draw couple examples here. I'm actually going to do this. Okay, so the first one, like I said before, being a bearish engulfing. The second one being a bearish variation pattern. The third one being a 3-bar reversal. And the fourth one being some form of an evening star, right? So typically an evening star is just a doji. than an engulfing. Okay, so when it comes to a 3-bar reversal, you'll learn about all these candlesticks later on throughout the course, right? But as of right now, just for the simplicity of things and not to get confused as you're very early on in the course, this is pretty much what you're going to be looking for at a lower high point to take your short, so you have 4 confirmations to enter the trade. You always want to have a minimum of 3 confirmations that goes along with your bias to enter that trade, right? So again, you can PM me anytime on Discord if you do have any questions. Depending on when you purchase the course, there may be new videos added to the course, so make sure you go back and watch those videos, and I'll talk to everybody within the next couple of videos.